All right, all right, all right. It's time for the Money and Power Show. You guys give me just a second. I will I'll sit here and do a little bit of liking and sharing, let people know that we're here. And we'll get this show on the road. Let's see if this thing is working. Is it working? Good morning, good morning, good morning, good morning. Yes. Okay. So we can share the group. Share this out to a few people. And we'll get this thing crack-a-lack. We'll go there. And we'll go here.
Black Wall Street. Right, build wealth, build life, economic empowerment, real tips, insight on the new Black Wall Street. It's on the new Black Wall Street. He's your host.
All right, my beautiful people, man. Thanks so much for joining us here today on the new Black Wall Street. This is the Money and Power Show, and I'm your host, ERGJ, your certified financial educator, CEO of ERGJ Enterprises, ERGJ Black Bazaar, and international best-selling author of the book, The Black Billionaires Club, Study of Black Wealth, the study of the 12 richest Black people in the world today and how they built their wealth. I just believe that if you want to be wealthy, if you want to be wealthy, you should study wealthy people. Matter of fact, just yesterday, we honored a good brother named Mr. Dr. Martin Luther King. And one thing that he did a lot of was reading. He did a lot of studying. He did a lot of reading. And now his birthday is something that we honor each and every year. So let's not look past the fact that Mr. King was a learned man. He did a lot of reading. Go ahead and hit that like button, that share button, let people know we're here. Also, not only is the Black Billionaires Club a book, but it is actually a club. So you have an opportunity to join that and decide to make a difference, to change some stuff and get with some winners, get with people who are serious about winning with money. Well, you can do that as well by simply going to theblackbillionairesclub.com, and you see the site here. Now, here's some things. I like to kind of show this, by the way. Here's some things that you get with your membership. You get some mastermind meetings. You get access to our mastermind lines, the book club. I got to add some more stuff here. Investment education. You're going to learn about money. You're going to learn how to make it work for you. You're going to get some personal development and business development. And you can subscribe today for as little as $9.99 a month. Now, today, guys, we are going to look in the stock market. The stock market was actually closed yesterday. So we're going to do a quick recap. But we're going to talk about two things today. How to invest if you're broke. And then we're going to get digging into the Dow. We're going to start digging into the Dow. I told you guys we're going to start looking, breaking down the Dow, looking at all 30 companies. We're going to start today. You know me, I don't like to wait or delay. Let's get started today. All right, so here, you're going to go over CNN, but this is where I like to be. I don't think there's going to be too much that I'm going to see here in the news that's going to be of interest to me. Because nothing really happened yesterday other than Dr. King's birthday. All right, so let's see here. I think I got it here. Nope. Let's do this. All right, so let's take a look again. We're going to do a quick recap of the stock market. This was actually from Friday because, again, the market was closed yesterday. So the Dow was up 336 points, the NASDAQ 73 points, and the S&P 500 34 points. And now this is also interesting, good news for you as well, especially if you have a JOB and you are investing into your 401k. And we're going to have to talk about that too. Because here's the deal. Oh, let me do this. Let me make sure I can see these comments that are coming through just in case you guys are asking me anything. Yeah, because here's the deal about your 401k. So I'm going to have to share this story. You know, one of the number one rules when it comes to money is one of the top rules, not the number one. One of the top rules is you don't want to pass up free money. So everybody put down, so don't pass go, right? You don't want to pass go without collecting your $200. When on the Monopoly board, you don't want to pass on free money when you work for a company that's going to match, right? They're going to give you some free money. So But here's also something to understand. You know, you want to get the match, and you want to get that free money, but you also don't want to overexpose yourself to the market. So I had a family member that's trying to catch up on their retirement, and so they were overexposed. They were up to about 10, almost 13%. They were investing into their 401k. So they finally called me. You guys ever make that call? You finally call the person that's smart with money. You finally give them a call and ask for some advice. How many guys do that? You actually seek wise counsel. And so she called me and told me what she was thinking about doing. And I was like, no, no, right? And it's only because you didn't know. You don't know what you don't know. And most of us simply don't know. Okay. So when it comes to your retirement, I still do retirement reviews. I know someone asked me that the other day. I can still help you to make wise decisions with your money so you don't retire broke. Okay. How about that? You don't want to do that. So yes, you want to get the match. You want to get the free money, but you don't want to overexpose yourself, because I want you to learn how to take control of your money. Everybody put console take control. I want you to learn how to take control of your money. So if you're in that situation, you don't know what to do, reach out and get some help. Seek ye wise counsel. Right? There's safety. There's safety. There's a reason why the good book said that. There's safety in wise counsel. All right, so anyway, the Dow is the 30 stocks, is the top 30, is the 30 most significant stocks in the world. Coca-Cola, Disney, Home Depot, things like that. Right? And we're going to take a look. We're going to dig into the Dow today. NASDAQ has got a lot of your technology stocks. S&P 500 is the benchmark by 500 stocks inside of that index. And here's the good news: you can simply invest in the market. You could have a in your account, if you had an individual account, you have a mutual fund. You got even in your 401k, you might be able to. I'm not quite sure, but you can invest just in the market using what they call an ETF, or an exchange traded fund. So these are things that you have to learn, but you have to decide to learn. That's the thing. Like you paid for your education. It's time to invest in your money, your financial education. Once you decide to do that and you learn about money, then you're going to find yourself, you're going to start questioning some stuff. I'm telling you, it's going to piss you off first. Like, oh, hold up a second. Why wasn't I ever taught this stuff? That's what happened to me. All right. Japanese now, Slumberg. This is all information we went over yesterday, so I'm not going to spend a lot of time doing it today because nothing changed other than oil dropped down to $53 a barrel, $52.97. It was up to about 54 almost yesterday. So that the commodity still has some shift. Gold really flat as well. Again, how are stocks doing since in 2019, since the beginning of the year? 6%, 8%, 6.5%, which means that you and I could have invested into the market on January 1st of 2019. We could have said that, this is the year. My resolution, my money goal, my money resolution this year, I'm going to start making my money work for me. I'm going to invest in the stock market. You could have chose to do that. That could have been a resolution of yours, all these other resolutions. Did you make a money resolution, by the way? I call these money resolutions. Do something different so you can get something different. So you'll be up about 6-7% on the money that you invested in a short amount of time. That's 22 days, by the way, into the new year. Everybody's talking about the stock market crashing. The market's going down. Really? Is it? Okay. Well, all right. Well, maybe. I don't know. But my theory is, I think it's going to be very difficult for the market to go down with a businessman in control of the United States. Anyway, the emotion that's driving the market. This just tells. I like to look at this because it tells me where people are fearful or greedy. All right, they're greedy. I'm being fearful. I'm trying to sell some stuff. When they're fearful, I'm trying to buy some stuff. And back on December 24th, which was the New Year, Christmas Eve, it was extreme fear in the market. Now notice this, that there is fear in society, but when it comes to that which controls society, which is money, there's not that much fear. Isn't that interesting? There's fear, or there's volatility, or there's uncertainty in society. You know, the government shutdown. Is the wall going to get built? All this stuff. But guess what? When it comes to money in the market, which drives the economy, the fear has been subsided. I don't know. I just find that interesting. I find that interesting. So one thing that I've learned is to look at money, to study money, to major in money. Everybody put in console major in money. To major in money. Okay. So let's do what I said I was going to do. I said yesterday, I said, y'all need to hold me to it. We're going to look at the Dow Jones Industrial Average. That's going to be 30 of the most significant stocks in America. And it comprises, this here has got companies in the Dow, right? And these are the companies. This is 2 pages, 15 slots each. So we're first going to look at 3M. That's right. We're going to look at 3M. So let's get digging into the Dow. Not digging in the crates, but digging in the Dow. Can't you guys tell I love this stuff? Oh, I love teaching. Ooh, yeah, I love me some teaching. All right, let's see if there's anybody else. Okay, all right. We're going to get digging into the Dow. So good morning to you, Instagram, Facebook. No. YouTube and Facebook. That's where I'm at today. All right, like and share, please. Hopefully you hit that like button, that share button. And we're going to get digging into the Dow. Now, of course, as well, you have the opportunity to join us. You know, if you want to start really taking it to another level, you have an opportunity to join us at the Black Billionaires Club. Just simply go to theblackbillionairesclub.com, theblackbillionairesclub.com, and join the club today. And you get a chance to connect with some Black folk who talk about money all the time. I tell you, I love talking to my sister the other day. She said, man, you know, since we started talking about money, not only have you changed my life, you know, how many guys, I don't have to say that. She's a first-time investor. Matter of fact, we got we got Black Mama T, right? We got introduced to Black Mama T. We got some early round investors of Black Mama T. Why? Because they were connected to a group that could give them information up front, first, fast. I'm telling you, if you buy yourself, you miss a lot of opportunities because they just don't come your way. The opportunities come to big groups first, by the way. Did you know that? They come to big groups. Why? Because those big groups house a lot of people and they get the information out quicker. If they got to go door to door trying to get their information out, you're going to be the last one to get it. At some point, at some point in the near future, you're going to wake up and you're going to say, you know what? I got to stop doing it by myself. I got to get connected somewhere, somehow, some way to some people that's talking about money. I'm connected to people that's talking about the concert. I'm connected to people that's talking about football. I'm connected to people that's talking about everything else, but the thing that I'm going to use for the rest of my life, I ain't got no connection to. That's a problem. I'm trying to tell you, that is a problem. Okay? All right. Get connected. All right, so let's take a look here. 3M Company is $195.86 per share. So you need $195 plus some. So let's say you need about $200 to buy one whole share of 3M Company. What we're going to do today, we're going to find out a little bit about what this company does, what value they bring to the marketplace, where they sit as far as their stock is concerned. All of these stocks, by the way, they do pay a dividend, how big the company is, things like that. Now, I can do a lot of that right from the screen, and we'll go a little bit deeper because you can just look at these tabs. But I'm just going to show you some stuff, and hopefully you can use it when you start to, take a look at some stuff. I think all of these things here. Oh, look at this 3M automated taping system. That's cool. They got something new coming out. An automated taping system. So we're gonna find out what 3M is, what they do. Here's where they were last trading session, which would have been on Friday. They were as low as 191.71, as high as 194. Their market cap, they're $116 billion company. $116 billion company. Okay. Here's some valuation from them. They didn't really have much growth last year, pretty flat at negative 2.63. This year, they're up 8% so far. Expected growth over the next 5 years of 10%, and revenue growth last year was up 5%. So they still had an increase in revenue. All their earnings were pretty flat last year. Getting tired of being last. It's time to be first. I know that's right, Miss May. I know you say that again, girl. Go on, Miss Golden Girl. Go on, Miss Golden Girl. All right. I guess this is a competitor, Carbo Ceramics. I don't know. Here's their financials. Annual revenue last year, 31.7 billion. Annual profit, 4.9. Look at this net profit margin, 15%. After they paid all after they made money, they paid all their light bills, employees, benefits, and all that stuff. They're sitting at 15% profit margin. Oh my goodness! And I know we got Mark Daniels here, runs the business. I mean, you know what? You know, net profit margin. Oh my goodness, Black folk, we gotta start talking about that. What's your expected net profit margin for the year? What's your goal? What's your target? Do you have one for your business? Come on now, gotta step it up. A sector that they're in producer manufacturing industry is industrial conglomerates. We're gonna take a look at this. Their CEO is a brother named Michael F. Roman, and they're located in St. Paul, Minnesota. That's their corporate headquarters. Here we have the what we call the professionals. Here's their forecast for 3M. Currently sitting at 195.86, a low forecast over the next 12 months, over the next year. Low as 178, a median at 203. So if they hit middle forecast, it'll be a 3% jump, and a high as 243, 24% jump if it hits the high. All right, from the forecast. It can go low and go higher. It can stay the same. That's just a forecast. Now, let's find out a little bit about what they do. Again, they're producer manufacturer into the industrial conglomerates, and they're a $116 billion company. It's a technology company which manufactures industrial, safety, and consumer goods. They operate their business through the following business segments. They have industrial, safety and graphics, healthcare, electronics and energy, and consumer. So the industrial segment they produce includes tapes, abrasives, adhesives, ceramics, sealants, closure systems, and personal hygiene products, acoustic system products, special materials, and filtration systems. So 3M makes a whole bunch of stuff. I mean, I think we know them for their tape, right? I think most people have seen some 3M tape. You got some Scotch tape by 3M. This is that company. Safety and graphics segment produces or offers personal protective equipment, traffic safety, and security products, commercial graphic systems, commercial cleaning and protective products, floor matting, roofing granules for asphalt shingles, and fall protection products. The healthcare segment supplies medical and surgical equipment, skin and health and infection prevention products, drug delivery systems, dental and orthodontic products, health information systems, and food safety products. The electronics and energy segment involves optical film solutions for electronic displays, packaging and interconnection devices, insulating and splicing solutions, touch screens and touch monitors, renewable energy component solutions, and infrastructure protection products. And the consumer segment includes sponges, scouring pads, high-performance cloths, consumer and office tapes, repositional notes, index systems, home improvement products, home care products, protective material products, and consumer and office tapes, as well as adhesives. The company was founded by Henry S. Bryan, Herman W. Cable, John Dwan, William A. McGonigal, and J. Danley Budd in 1902. So this company been around since 1902, right? Over 115 years. We see what they make, what they provide, what products they provide, what services they provide to the marketplace. And I don't really know which one of these segments is more is their big bread and butter. Obviously, I just think of them as the tape company, but I didn't know that they did all this other stuff. That's pretty cool. Here is over the past 5 years, how many employees they have under their belt. 91.54, almost 92,000 employees work for or through 3M company. Now, if you want to get some more information directly from 3M, we could go to their investor relations. This is what a lot of people don't know, that their information as a public company is public. Everybody putting it on so public. So it doesn't, it doesn't take, I mean, you just have to go and look to seek and find if you want more information, especially if you're an investor, you want to look at their investor information, and you can give them a call. They're going to take your call. Why? because they want you to invest with them. More money you put into them, the more that they can do with your money to hopefully to continue to grow, produce, research, development, all that good stuff. All right. And so, and what they're going to do is you're going to give them your money, and they're going to give you a piece of their company, ownership. Everybody putting down, so own something. We're going to put ownership in that company, right? So early in the morning, we're waking up talking about money. Black folk talking about money in the morning. Ain't too many people doing this. Nope, not too many, not enough. That's what we're doing this morning. All right. So I would normally probably break down the chart, but I'm not going to do that this morning. But you can see where it's been at, what's been going. You know, this is something we're going to do. We're going to do when when we get to the club. You want my personal advice. You want some assistance. This what people pay for. Yeah, they pay for they pay for my analysis. Let's keep going. Here's what the professionals, quote unquote, the professionals say. 70 analysts offering a 12-month forecast, and we see where they're at. Recommendations is a hold right now. They're saying, hey, just hold this. If you have it, hold it. If you don't have it, hold off. They don't really have a buy on it right now, but they're saying just hold, just wait a little bit. Let's keep watching. Just keep watching. Sales forecast. Here's your sales. Here's your reported sales from your growth, from your forecast. Earnings per share, reported earnings forecast for quarter and by year, So we see the past, and then we see the projections from the analysts for the future. We see the past 4 quarters, and we see the projections for the analysts for the next 2 quarters for your quarter, next 2 years for your annual. Okay, so that's just all you're seeing here is just history and projections. History, projections, history, projections, history, projections. All right. We get more into that, of course, when we get to our private wall. Come here, start looking at their financial summary, right? Black folk. Okay, if you really operate a business, then you got some financial summaries. People can look back and see, how did you do last year? How did you do the year before? How much money did you make? I'm telling you, a lot of you guys say you got businesses that you run, but you do no projections. You have no financial data. You have no history. You are a hustler. You're not in business. Okay, we got to step it up. Step it up, people. All right, got to step it up. I mean, one good time to do this, by the way. Well, not good time. I think you should do it every quarter, but I don't do it every quarter. It's tax time. It's a good time during tax time to look at how you did. And then you got how you did last year. Then you pull out your tax records or whatever you did from the year before. You say how you did the year before. And guess what? You can look and say, well, did we make progress? Right? Did we sell more stuff? All right. Did we make more money? Did we make less money? How do we do? Now, here's the deal. If you don't have a business, that's okay, because you can do it from a personal standpoint. How did I do this year? And how did we do last year? I think that's pretty important. We can start to track our progress, our financial progress. Everybody put a console on progress. Begin to track your progress. Now, from a personal side, you're obviously going to look at your income, which you probably know. But guess what? You're going to look at your expenses. You're going to look at your liabilities. You're going to look at your spending. Now, notice this. They made their gross income was 15.4, right? Their expenses, hold on, 15. Their revenue was 31.8 billion. Their expenses was 24.7 billion. So that's a $7 billion of net profit. This is how much they sold, this is how much they spent. All right, roughly, something like that. 5 billion after all the taxes and stuff. I was generally right. So made that revenue, operating expenses, other expenses, taxes, they made 5 billion. All right. You should know this for your personal. You should go through this personally if you don't have a business. If you have a business, you need to go through it personally, and you need to go through it for your business. How much you made, how much you spent, how much you paid in taxes. What's your net? All right. Makes sense, right? That's how you can track your progress. All right, balance sheet. That's the income statement, right? balance sheet here. We can take a look at their assets. That means what they own. Right? You and I, we should do the same thing. We call this our net worth. What we own, our assets, versus what we owe, our liabilities. You can do this from a personal standpoint as well as for your business. You know, okay, well, what do I own as an individual? I've been working for 20, 30, 40 years of my life. How much stuff do I own? And I can tell you as Black people, not much. What do I own? But that means that what do you own that you don't have to pay a bill on? What do you own that is not tied to a car note or a loan or a credit card? What do you own? And then what do you owe? And then you can see, okay, where am I operating in the black? Am I operating in profit? Am I operating? Do I have something that I can give to the next generation? If your assets are larger than your liabilities, then you got something to give. You got benefits to hand down. If your liabilities are larger than your assets, that means that you are going to pass on bills. You got to ask yourself, do I want to be in a position where I'm passing on to the next generation? If my inheritance is going to leave benefits, or is my legacy going to be I'm going to leave bills? We're going to have to talk about this more. I feel like talking about this more. Now, some of us may not understand that, you know, if you got life insurance, right? Life insurance is an asset, right? It's something that you can use as something that you can pass down. I mean, I'm gonna have to do something about this. Y'all giving me some ideas, by the way. Thank you so much. I appreciate you. We're gonna talk about this. But anyway, from a business standpoint, we do this from business, and we should do this from a personal standpoint. Great time to do it, tax time. What do I own? What do I owe? Now, I will do, if you need help, I can do a net worth session with you. So we can go down, we can break down your personal net worth. What do you owe? Do you own more than you owe, or do you owe more than you own? If you own more than you owe, great. You're going to be passing down some benefits to the next generation, to your wherever it is you want to pass it down to your beneficiaries. If you owe more than you own, not so great. We can work on that. We got to fix that. But first, we got to know our numbers. Everybody put guys on know your numbers. You got to know your numbers. So in this particular case, 3M. Total assets, 38 billion over I think this is a quarter I'm looking at, 2017. I wish 2018 come out. It's going to come out soon. Their total liabilities, 26.4. So as a company, they're up 12 billion. Their company's financial strength, right? Equity, 12 billion, 11.6 billion. Their equity, 11.6 billion. Right? You see that? 38 total assets minus, right? Total liabilities, 26.4. Their equity, shareholder equity, 11.6 billion. So people who are invested into 3M, their shareholders, know that the financial strength of this company is, if they were to sell everything up today, they were to go out of business, they still have 11.6 billion in equity to pass on to who? To the people that own the company, their shareholders. Is this making sense? I consider myself an educator. Is this making sense to anybody? I just want to make sure. Just want to make sure they're making sense to PayPal. Numbers are here. Cash flow statement. This just means, right? This just really looks at how their daily their cash is flowing in and out between all the stuff they're doing, investing, financing. The net cash flow negative 2.7 billion. Not a big deal. You know, just you know, these are just numbers to show where they are, where they're putting their money, and where their money is going as far as their liquid money, their liquid assets, right? So of course they have their cash flow, their operating expenses come from their net income, right? After they sell stuff, after they pay all their employees, after they pay all their bills, now they have net income, and then they got to do something with this net income. Everybody puts they do something, just like you do something with your discretionary income. You get paid by your job. Everybody put in console. I'm the CEO. I want you to understand that you are the CEO of your family's empire. And your family empire is a corporation. You are the CEO, you're the CFO. You know, who's gonna be the CFO of your company, your family company. And so everything we're talking about today is stuff that you can do in your family to build wealth. First, you got to understand it though, right? Net income just means, okay, we got paid our paychecks. And after we paid paid the house bill, paid the mortgage, after we paid the car note, after we paid electricity power bill, after we buy food at the grocery store, after we pay for our children's education. At the end of the day, we have a net income, either positive or negative. Now, if it's positive, the question is, what are we going to do with this net income, our discretionary income? And so now we're saying, okay, well, it's our discretionary income. We got to do something with it. Why? Because we don't want to just sit it in the bank. No, you don't want to just do that. You want to do what? Same thing that companies do. Oh, we want to invest it. Your 401k, your IRA, your life insurance policy, your money market account. You know, we want to invest it. If we have, first we got to get to a point we got positive cash flow. Everybody put it on to positive cash flow, just like this company does. They got positive cash flow. Their net income is positive, means they got positive cash flow. And then we want to say, okay, well, we're going to do something. Notice what the companies do. They invest it, right? They invest. And now here's the interesting thing, which I don't necessarily recommend from a personal standpoint, but they may borrow money to then do something with. So they finance the money as well. So this is money they got going out to invest. This is money they might have coming in because they're leveraging their net income. And people are saying, hey, you guys have positive cash flow, so we can let you borrow some money in order for you to grow. Leveraging. This is leveraging here, down here. Financing means leveraging. All right. Got net proceeds or stock sale. This is good stuff. So the net cash flow after they invest and borrow, okay, is down to 2.78 billion. But then here's what they have: net change in cash is what they have left in cash. So notice this: as an individual, as a CEO of your family corporation, you can get to a point that you have positive cash flow. Then you can start making some real good, you can start making some decisions on how you're going to make this cash flow work harder for you than you work for it. This is making sense to anybody. I'm just talking in terms of this stuff that we're watching, or that we're looking at while we're digging into the Dow 3M. And we're going to do this every day. I'm going to start beating this stuff in people's heads. You can do the same thing with your family business that you operate right now. That doesn't mean it's got to be buying or selling anything. Hopefully you will. But you have a family business because you got money coming into your storehouse. You got money coming to your house. We've just been bad CEOs and bad CFOs. We've been bad managers of the money that comes into our corporation. And it's called the Reed House, the Reed Enterprise. It's called Williams Incorporation. It's called Golden Girls Inc. It's called Daniels and Wife. These are businesses that you are running, which is called your household. Have you been a good CEO? Good manager? Are you operating in the black, the positive, or are you operating in the negative? Do you have positive cash flow? Do you have negative cash flow? If you have negative cash flow, we can fix that. Because it's not as important of how much money you make. What's important is how much you keep. What's important is what you're doing with the money that you make. What's important is your spending habits. Your goals, right? Your financial goals. All right, making this sense to anybody. All right. I know. Everybody don't want to talk. Yeah, I'm going to preach. I'm the financial preacher. Everybody don't want to talk like this. All right. So, all right, we look at the shareholders start seeing. Of course, this is going to be basically, guys, shareholders going to be your CEOs, CFOs, all the people who run the company. That's going to be your inside trading. That's going to be your people who run the company, what they're doing. Are they buying? Are they selling their own stock that they own? Are they doing some pretty big, big sales? So no large purchases are here. That's look at this. This is 3,500 shares that was bought by Marlene M. McGrath, the Senior Vice President, Human Resources, and she bought it at $200 per share. That was a $703,000 transaction. Since she bought that stock has decreased 1.87. So this is probably like a stock option. She probably didn't just spend $730,000. Maybe she did. More than likely, she was gifted or she was given, or through her company bought that stock for her because she is an insider. These are some of the benefits, hopefully, that if you do have a job, you're taking advantage of buying stock in the company that you work for. If they have stock, if they're a publicly traded company, or even if they're a privately traded company. Companies like Publix, they have private shares that they give to their companies. It's called profit sharing. How many guys work for a company and you're part of their profit sharing? Huh? Your 401k, when they say we're going to match you dollar for dollar in your 401k, guess what they're matching you with? They're matching you with company stock. I hope you understand that. They're matching you with company stock. Okay? Saying, hey, okay, well, you're doing 5%. We're going to give you we're going to match it up to your 5% with that amount of company stock, dollar for dollar. So that money isn't coming out of their cash. That money is coming out of their stock, out of their equity. Everybody put accounts on equity. You guys understand what I'm saying? Hopefully I'm not talking over your head. I'm not using big financial jargon. Hopefully I'm making it make sense. All right. And this is just an overview, guys. You guys want something detailed, it's called set an appointment. Book me for my services. Ooh, Lord. Here's going to be large institutions, by the way. These are like mutual funds. These are the big banks. These are the big corporations that are Vanguard. That's a financial institution. You got institutions and what they're doing, buying and selling, buying and selling, adding this to their funds that they allow for you and I to invest in, mutual funds, things like that, right? So that's what this is. And you can see what's going on here. So you can look at that. Now, what I want to look at real quick, I want to look at the investor relations. So this right here, what you see here, this is actually 3M and this is their investor relations. So you could come here and you could say, let's see here. They got products. That's not all. This is their website. And you will probably come all the way down to the bottom. And you will look for investor relations. There we go, right here. Boom. And then here is if you're saying, hey, I like 3M, but let me go see what's going on. Let me go hear from the horse's mouth. Everybody put in the comments, though, horse's mouth. You want to hear from the head. Everybody put in the comments, though, head. You want to hear from the head, right? So we went to a third party and got some information. And that's not good enough. We need to go directly to the source, the head, right? We want to go directly to the source, and that's what we're doing here. So we are now on to 3M's site and investor relations. How many guys have done this? First you got to probably be an investor in order to want to have some information or have some relationship with the company. Now, investor relations, that's what this is. Every company, every publicly traded company has this. Even companies that's not publicly traded, they have a section for people to go in and look and see from the head, from the source, information on their investment packages. Okay. So here, look at it. They got annual reports. They got quarterly earnings, company information, business financials, technology, data book, infographic. What's that? Oh, let's see. Sustainability reports. And I know Mark is chomping at the bit over there. He's like, oh man, all this stuff, man. This is thing right here. Look at this. This is 2017 F-year fourth quarter, I think. Right? They break it down for you. Free cash flow conversion, 100%. Adjusted earnings per share, $9.17, 12.4% year on year up. Their GAAP down 2 point. I don't know what GAAP stands for. I had to look that up. Growth something. Their organic local currency growth year over year, 5.2%. Operating income up 24.7%. Right? They breaking this stuff down. Net sales, 31.7 billion. That's up 5% year over year from last year to this year. Impact of currency on worldwide sales, 0.05. Impact of divestitures, net acquisitions, worldwide sales, net down 0.6, flat, right? Organic local currency sales growth by business. Here's their sections. Now, remember I said I don't know which section is doing the best. Obviously, now we know. Electronics and energy, up 11%. Industrial, up 4.9%. Safety and graphics. So all that stuff we read earlier was like, this is what they do in industrial. This is what they do in safety and graphics. This is what they do in healthcare. This is what they do in consumer. Their biggest growth area was electronics and energy. Right? Investments in research and development, what they're investing to create more products that'll be useful in the marketplace. Investment capital expenditures, right? This is going to be expenditures, expenses, capital. I don't know what this is. All right, dividends. This is the dividends they paid out. So they do pay dividends. They paid out $2.8 billion in dividends to their investors last year. Here's how much they bought back in stocks from their investors last year. Right? All this information is available to you and I. We just have to know how to find it. Everybody put down, so seek and ye shall find. Seek and you'll find. All right. Now, we got stock information. Look at this, dividends. I like to look at that. I wonder how much they're going to pay me. Above and beyond what I buy. 1.36 cents per share, $1.36 per share. So if you buy, this is every year. Hold on. Is this an annual? I think this is annually. I don't see the yield. But anyway, if you bought 3M, right, $195, basically about $200, you buy 3M. After 1 year, they're gonna pay you just like a savings account. They're gonna pay you $1.36 right now. That changes over time, but it's been roughly. Oh no, that's per quarter. My bad. Okay, so that's per quarter. That's right. This is 1, 2, 3, 4. That's per quarter. So 2018, they paid out $5.44. So you can take the $5.44, right, that they paid out per share, divide that by 195, roughly, something like that, whatever the stock price is, 195, and you can get the yield. All right, let's do that let me do that real quick on my other screen. 544 divided by 195.60. So they got a 2% yield. So they're paying 2% dividends, 2.78% in dividends. That's more than your bank account. That's like your savings account. That's more than your savings account. That's more than your checking account. That's more than your money market account. So just having one share, you're going to get 2.7% of your money paid to you by the company just for being a shareholder, roughly. Is that making sense? This is what they did last year. Now, I don't know what their stock price was at the end of last year, but I'm just trying to give you a good guesstimate here. That making sense to anybody? Look at this. To learn more, download the dividend reinvestment plan. Right? Having 3M investments automatically reinvested in additional 3M stock through the automatic reinvestment plan. So you can, I think you can buy stock. Can you buy stock directly through them or something? Look at this. 3M has paid dividends to its shareholders without interruption for more than 100 years and has increased the annual dividend for 60 consecutive years. All right? Dividends are paid out every quarter, every 3 months. It's a quarterly dividend. You can tell it's a quarterly dividend, by the way, because they're saying they reported, they declare dividends every quarter, every 3 months. January to May, May to August, August to November. That's every 3 months. So it's a quarterly dividend that they pay out. Can you imagine? Right? You just say, okay, well, I got one share. Then I build it up, and now and this is not even looking at the appreciation of the stock. This is just saying, hey, they're going to pay you without fail. Roughly, if history tells us without fail, they're going to pay you regardless of what the stock does. Regardless, it goes up, it goes down. right? I think 100 years is pretty dependable. This is what you call passive income. Everybody put accounts on passive income. This is passive income. They're going to pay you for being a shareholder. They're going to pay you roughly 2% per share, or 2.78%. So when people start talking to me about stocks, about savings, and I'm like, listen, you got companies out here that'll pay you. Now you can choose what to do with it, but you can reinvest those dividends. You can have them come to your bank account. You can have them go to your savings account. You can have them go wherever. But this is your money that they paying you, and they've been doing it for 100 years straight, and they have increased their dividend annually every year. Now, 2.78% isn't beating inflation roughly, but it's keeping up. It's roughly keeping up. It's doing a good job of keeping up. But imagine you did this, you had this. These are called, what people call this, the income strategy, where you invest. And I like the income strategy. I like to invest in companies that pay me a dividend. Kind of give me a little peace of mind, so I don't have to be concerned about if the stock goes down. But they paying me every quarter. How many guys right now you get a statement either via email or probably email that says a dividend has just been paid to your account? How many guys get a statement like that? I like those statements. It made me feel good inside. Oh Lord, who is teaching this stuff for free other than your boy? Yeah. You still ain't joined the Black Billionaires Club yet? Oh my goodness, what you waiting on? You still ain't joined? Oh no, what are you waiting on? Join the Black Billionaires Club today. By the way, you want to get more of this? You want to learn about money, right? Invest in yourself. Invest in yourself. Get what you need. I got what you want. Join the Black Billionaires Club today. $10 a month. All right. Woo, Lord, I'm feeling good. All right. I could go. We could probably go into more with 3M, but is this enough for you to chew on? Should I go? Do I need to go further? I do this for fun, man. Man, 100 years without interruptions, 60 straight years they've increased their dividend. You want to talk about stable, dependable? That's dependable income. It's not likely to end next year. Very highly unlikely. Okay. Y'all getting the point? Y'all not talking to me now, huh? Are y'all just wild with information or something? Woo! I know it's a lot to swallow. A lot to swallow. Well, so this is 3M, guys. 3M by the Dow. Hope you hit that like button, that share button. I want to go real quick into how to invest if you're broke. So let's do that. That was 3M, guys. We're going to pick up on another stock. We're going to look at another. We're going to dig into the Dow again tomorrow. We'll go to the next one and then go to the next one. Hopefully this is some valuable information for you. I know I'm not going to tell you whether to buy or sell this stock or whatever. We get into that when we start evaluating the stock from a private standpoint when you guys join the club. But I can overview all day long, so you guys at least learn something, and then you can decide whether you want to go do something by yourself or you want to join the club, and we can teach you how to do it, and we can do it together. That's up to you. But I'm definitely not going to do any analysis today. People pay me to analyze stuff for them. So, if you wanted me to analyze, pay me. If you want me to analyze individually, book me. If you want to analyze and you want to learn as a group, join the club. That's how that works. Yeah, that's how that works. So anyway, found this nice little article. This is back in 2012, by the way. Company in a place called Investopedia. Good place for you to go if you want to learn about money. Go to Investopedia as well. How to invest if you're broke. I thought that was a good title. I thought that was a good title. Now, what's the biggest problem people with lower income have with investing? Those saying that it takes money to make money is true. And those living paycheck to paycheck, there often isn't enough money left over, right? That we talked about net income to put towards investing. When you need money now, thinking about IRAs and stock market might be so far down your priority list that you'll find all these financial experts a little bit out of touch. How many of you guys feel that way? I just don't have the money to invest. However, the fact remains, if you don't put money away for later years, you will face a catastrophic situation. Someday you won't be able to work, and Social Security won't be enough to live on, assuming the fund is around in 20 or 30 years. So what can you do? We put together a few ideas for those people who don't see any available funds for investing. You need money. First, we have to solve this problem of limited funds, and advice isn't new or revolutionary. Something in your life has to go. But it doesn't have to be a big life change. How often do you go to Starbucks for your morning coffee? How often do you go to the nearest fast food restaurant for lunch? How many times have you hit the bar to blow off a little steam after a hard day at work? You got to look at your spending. Well, if you cut even half of those expenses each month, netting you an extra $50 per month, at the end of the year, you will have $600 to invest. Over 20 years, that $600 could become more than $22,000. If you save that same $600 each year, $600 may not seem like much to get started, but anything is better than nothing. Everybody put it down, so something is better than nothing. Now, I can talk to you guys a lot of different ways of how you can get started investing today, and it doesn't cost you a whole bunch of money. I can talk to you a lot of different ways that you can do that. Even if you feel like you're broke, right? This is good stuff. We can show you. But first, you got to have a desire. You got to want to do it, and you got to be willing to give something up. I like that, Don. Tell everybody, yeah, I like that too. Something in your life, something in your financial life, something in your spending habits has to go. But that's only going to go if you want to learn how to make your money work for you. If. The big if. Everybody put down the big if. You got to make a decision. If. That's the big. Some people do, some people don't, most people won't. If. It's a choice. It is a choice of, I would say, of self-control. It's a choice of discipline. It's a choice that could change the whole dynamics of your family financial structure. If. Some people do, some people don't, most people won't. We're talking about $50 a month. How many guys right now are investing in something that's costing you $50 a month, but you're not getting a return, i.e. some of those multi-level marketing companies that you're part of? Huh? If. You're hoping that it's going to bring a return, but it's not bringing you a return. If. We can start there. That's the big black folk thing right now. I don't just do multi-level marketing. I'm gonna try 15 of them at a time. If. Gotta start making better decisions, people. Now, I'm not getting on network marketing or multi-level marketing. That ain't what I'm getting on. I'm just saying you need to evaluate if you're getting a return out of what you are spending every month. If. You say you don't have it, but you're at the concert every weekend. If. Some kind of way you find yourself at Ruth Chris and some of the most expensive restaurants every weekend. If. You got dividend reinvestment plans. We just looked at one with 3M, right? They allow you to invest small amounts of money into dividend-paying stock by purchasing directly, everybody say directly from the company. I can show you how to do that as well. Companies like GE, Coca-Cola, Verizon, Home Depot, Johnson & Johnson, 3M, we just looked at that, are just a few of the companies that allow you to make regular purchases on a very small amounts of stock and reinvest the dividends. This can add up to a big investment over time, and as you go in a larger balance, you may consider diverting some of those funds into other investments. Everybody putting it down, so DRIP. Who's taught you about DRIP or dividend reinvestment plans? We learn how to dip. We need to learn how to drip, baby, drip. Right? ETFs, I can teach you about this as well. Electronic, it's supposed to be exchange traded fund, electronic, maybe it's exchange traded fund. Exchange traded fund, they're electronic. Exchange traded funds. Everybody put it down on ETF. They're financial products that track the performance of a certain sector of the investment market. You can buy as little as one share of an ETF through a broker, and some of these ETFs track the performance of the total market, the bond market, and many others. This is what many of you guys have in your 401ks. You got ETFs or mutual funds. Many ETFs also pay a dividend. Making a purchase in a fund like the Vanguard Total Stock Market ETF is an instantly diversified portfolio and also pays a dividend. ETF. How to invest if you're broke. Target date funds. It's your 401ks. Okay, that's a good investment. Mr. Mark Danes. Target date funds. The name applies. Target your retirement date by changing the percentage of stocks and bonds to ensure that your money remains safe as it approaches retirement age. Some of these funds require a minimum of $1,000, but they may serve as great products for investors who don't want to manage their portfolio on their own. Use caution when picking a target date fund because of the high fees that some funds charge. This is what we do in the retirement review. We help you to select some funds, and we also review those fees to make sure that you're not paying excessive fees, which many guys don't even know what you're paying, right? And you get the best products available, and you have something that's current, that's relative to the market and your goals. So obviously we got to decide what your financial goals are. I can teach you about that as well. If you want to learn, if you decide to either join the club or you book me for my services. Either way, you can learn or you can find it on your own. That's another option. Free means find it on my own. I hope you guys understand that. Free means I'm going to do it by myself. That's what free means to me. I want it for free. Okay, you do it by yourself. You've been doing it because if free ain't been working for you, I mean, I don't think free been working for you up until this point. Free got you the knowledge that you have that got you into the debt that you're in. So you keep free. If you like free, you just keep doing. You just keep moving right on along in the route that you're going. That's free. It's free for you to keep doing what you're doing. I'm telling you, I got to the point where I just don't have no remorse. You know, you're gonna do it or you're not. You got your 401k. Match your contributions. Invest there first. If your company is giving you free money to invest, you should always fund your 401k before outside investment. I'm not going to say that's true, but you definitely want to take advantage of the free money, right? You should always get free money when you can. All right, here's your bottom line. Some of these strategies may require the help of a financial advisor or a financial educator or a coach. But most people, look at this, most people, if they're willing to give up a few small luxuries. Most people, if they are willing to give up a few small luxuries, can find small amounts of money to invest into their retirement, invest into their future, invest into their business, invest into their portfolio. Most people, if they are willing to give up a few small luxuries. And then you got to ask yourself, am I willing to give up a few small luxuries in order to ensure that when I can no longer work, my money is paying for my lifestyle? Here's the big question. If. That's what it comes down to, which means it comes down to your free will choice to do something different. How to invest if you are broke. All right. Was this good stuff today? You guys get something out of today? This is the New Black Wall Street and the Money and Power Show, where we got black folk talking about money in the morning. Right now, I'd like for you to go ahead and share with us something that you learned today. And I always like to know that if the time that we come together, if it's been valuable, if it's worth your time and why. In the comments below, share in the comments below your seed. What seed has been planted into you? What seed of thought? What financial seed has been planted into you that you're going to cultivate and grow so that you can receive a harvest? I don't do this to waste my time. I do this to invest in you. Now, you have an opportunity, again, as I've been saying, to join the Black Billionaires Club, where you can get some of this information and more. We can find out what's going on with you individually, personally, so we can help you to build wealth for yourself. But guess what? Is it easy to join the club? Yes, it's easy. But you know what? It's also easy not to do. And this is where a lot of people are. Yeah, it's easy to do, but it's easy not to do. Most people choose not to do, and therefore they remain. And you got to ask yourself, do you want to remain wherever you are financially? If you're cool, you're good, good job. If you're not, some of the things we talked about today, some of the things we went over today, and they don't, you still need some assistance. You ain't getting it all. It ain't making much sense. Well, you ain't going to be able to fight. You don't have to fight by yourself. Join the Black Billionaires Club today. Go to theblackbillionairesclub.com, theblackbillionairesclub.com, and join the club today. Well, I'm your boy, ERGJ, your certified financial educator, CEO of ERGJ Enterprises, and the international best-selling author of the book, The Black Billionaires Club. As you see on the site, you can buy the book. You can book me, right? You can join the club, all right here from theblackbillionairesclub.com. This is the Money and Power Show. And I want you to remember this, guys, that it takes a village. It starts with us. Starts with you and I looking in the mirror and making a decision to change. Making a decision to walk away from the crowd who are unwilling to give up a few small luxuries so they can build wealth for themselves. It starts with you and I. Let's build wealth. Let's build these bank accounts. Let's build our family financial empire together. We all we got, people. Y'all know I ain't lying, but guess what? That's enough. Now, I pray to God preserve each and every one of you that hopefully he gives you another day. We can meet here tomorrow, right here at 7 a.m. Eastern Standard Time for the Money and Power Show. Until then, until then, you know what time it is. Mr. DJ, hit the music.
The new Black Wall Street. Thanks you for joining the show. We gave a lot of great tips, but it's time to go. Take the knowledge we shared, hope you use it and grow. We'll see you all there at the next episode of the new Black Wall Street. The new Black Wall Street.